one of the challenges that the accounting industry faces is, a lack of talent. And I think one of the ways that companies and accounting firms can address this is by utilizing systems very well. And I think it creates real opportunity for niche industry tools to really excel and really add a lot of value to companies.
Welcome to the Cloud Accounting Podcast. I'm Blake Oliver. We're joined today by Paul Giese. Paul is an accounting manager in the biotechnology industry and the founder of intheBlk software, a collection of web-based tools for biotech accountants. Thanks for joining us today, Paul.
Thanks, Blake, for having me.
So, Paul, you and I connected, I think it was on LinkedIn. Twitter. You found it on Twitter, right? Twitter. And particularly about ASC 606 revenue recognition, which is all the rage these days. For those of you who are not familiar with ASC 606, this is the new revenue recognition standard that has been adopted by FASB and has gone into effect already for public companies and is going to be effective for 2018 for most private companies for financial statements. So everybody is trying to get their ship in order for revenue recognition. So we're talking a lot about that at Flowcast. We are talking a lot about that online. Everyone is trying to figure out what to do, scrambling to get ready. So, Paul, I'm really excited to talk to you because you work in the biotech industry, and I had no idea that there were some really unique challenges for biotech when it comes to revenue recognition.
The ASC 606 has been one of the biggest monumental changes in accounting standards over the last decade. So it's been a very big change for the industry and across all industries, and the accounting firms have been putting out a lot of guidance, and companies have really been struggling with how do you recognize revenue, because it's a very drastic change. And so I think it might help to talk about kind of the economics of a biotech collaboration where a small biotech company would partner with a large pharma company.
Yeah, that sounds great. For everybody who is not familiar with ASC 606, check out revenuehub.org. If you're looking for more information, go ahead and pause and head over on there, and it'll give you a great understanding of what exactly this massive change is that we're talking about. So, Paul, please do continue.
Yep. So typically what happens in the biotech space is that a small biotech company will partner out several of its program pipeline to a large pharma company, where the exchange is the small biotech company gives away commercial rights to future drugs. And in return, the large pharma company will provide cash. And so typically what happens is that with a large upfront payment, that would go to revenue, and then you recognize the revenue over the performance obligation, which is typically getting a drug through to commercialization and approval with the FDA. And so under the old guidance, which is ASC 605, companies would identify what the unit of accounting was in the agreement, and then they would straight line whatever the valuation of that obligation over the performance obligation. So typically that could be 5-10 years out from the signing of the contract. Mm-hmm. Under ASC 606, now instead of straight lining the value, you're going to be recognizing the revenue on a proportional performance method, where essentially it's a percentage of completion. So on day one, you have to identify what the total cost is for you to take that drug from preclinical all the way out to commercialization, which could be, as I said, 5-10 years. And that's very difficult task for a small biotech company where they might have an accounting department of 3, 4, 5 people.
So let me pause you there and make sure I understand. So under the old guidance, 605, if I was getting $50 million over 5 years to develop a drug, I could just straight line that. So I had $10 million a year.
Exactly.
Of revenue. Easy.
Yep. Very easy.
But I cannot do that anymore.
No. Now, the FASB has said, we want to recognize revenue as the transfer of ownership occurs. And so you need to identify a way to track your performance over the performance period, which is typically cost for biotech companies because that's the easiest way to kind of track how well the company is doing. And then as you're recognizing those costs, you would recognize the revenue. So if in year one, if you incurred 10% of the cost, then you would recognize 5 million of the 50 million upfront payment.
So 10% of the cost. So how do I know what my total cost is going to be? Like what's all this based on?
So it's really based on estimates. And a budget would, for most companies, you go out, 18 months or maybe 24 months. But beyond that, you're typically relying on a long range planning tool or, some high level estimates where you might say, okay, a patient, enrolled in a phase 1 trial costs $150,000 and I'll assume that I have 100 patients. So that cost goes into your model. And so you have all these high level estimates that are going to obviously change as time progresses. And so that could potentially create wild swings in your revenue. And so I think people, analysts, audit committees, boards, management are all concerned because under 605, is very, you just straight lined your revenue. It's very predictable and everybody was happy. But now you can have some really wild swings period over period, depending on how well you can budget and how well your long range planning.
So I'm just thinking through this. Let's say nothing really changes and I in a particular period, I don't have that much more in terms of cost, but for some reason, I don't know, maybe a trial goes well and we realize we're not going to have to do so many trials. Mm-hmm. Suddenly my total cost estimate is less, right?
Yep.
And that would then mean that I'd recognize more revenue?
Exactly.
Interesting. So,
and the opposite can happen too. It's like perhaps you get bad data and you say, hey, we're going to terminate this program. And then suddenly your costs are reduced and you recognize more revenue, which is kind of the inverse effect. You would think, oh, we got bad data. That's bad news. But in fact, now the pie has shrunk. And so you're recognizing more revenue. So it's a little wonky on how the revenue is recognized.
Howard, what kind of data do you now need to collect in order to make these estimates?
Yeah, so that's a great question. So you would historically have your external costs, which are costs with a clinical research organization, your manufacturing vendors, any lab supplies. Those costs all are now, typically you were always recognizing all those costs, but now the classification between the various programs matters a lot more because if you have a program that's in a collaboration agreement and you have a program that's not in a collaboration agreement, because the expense is driving the revenue, auditors are a lot more concerned about the classification of the expense between program A and program B. And so as an organization, you have to have better controls around ensuring that the costs are accurately coded to the correct program. Mm-hmm. Another piece of data that needs to be collected is time reporting. Because typically for a biotech organization, your headcount is a substantial part of your cost because these are PhDs who are doing work and they're expensive. And so you have to collect the data from your employees and then you will recognize the cost. Typically in these agreements, they have a negotiated FTE reimbursement rate. So the large pharma company would reimburse the small biotech at a fully loaded rate of, say $250,000. And so you would use that rate times the number of hours incurred in the quarter, and then that goes into your cost as well. So, and predicting the number of hours incurred in a quarter and over, a 10-year period is extremely challenging. And I think that can also really swing, the total cost of your agreement.
Right. So I'm accumulating expenses by program, and I'm also tracking hours because that's an element of the cost in detail. And I mean, I've got to project in terms of the FTE hours, I've got to project those out 5-10 years. I imagine there could be some really drastic swings on those estimates from quarter to quarter, year to year.
Yep, exactly. And whether it's a timing difference or a cost savings also matters, because if it's a timing difference, right, then you push a cost from Q2 to Q4, and your full year revenue recognized doesn't change. But if it's a cost reduction, it reduces the pie, so to speak, and so you would get a true up of revenue.
Right.
And then you also have to think about the long-term and the short-term classification as well, because the auditors are going to care about that classification for the balance sheet. And so having your controls around the long-term and short-term component is also another factor that you need to consider.
Wow. What a humongous difference from simply straightlining that revenue.
Yeah, it's been very challenging to implement.
So let's get to the technology part, because I like that. How are biotech accountants, and really, I suppose this would apply to anyone under ASC 606 that's doing percentage of completion, right? So how are accountants who are doing this percentage of completion based on cost or revenue based on cost estimates, how are they doing it now? Like, how would you do it?
Yeah, so currently everybody in my network here in Boston is tracking their collaboration revenue in Excel, because there's no solution. So you have massive Excel spreadsheets where you're keeping track of all this data, and every period that you're recognizing revenue, you have to save. What we're doing is we're saving down a new version of the same file every quarter, where we update all the inputs and any changes to the estimate, and it's basically saved on our hard drive or our network drive. And it's frankly disorganized, and well, not disorganized, but it's just very challenging to keep track of any meaningful data, because maintaining a very complicated spreadsheet is challenging, and it's hard to derive real data from an Excel spreadsheet. And then forget about internal, like any sort of IT controls, right? It's you can lock cells in Excel spreadsheets, but that gets really challenging to do, and there's no documentation of changes and user rights, anything like that.
And I imagine that in terms of the estimates, you have to involve outside parties. Yes.
Yeah. I mean, it involves the entire organization. So you have to talk with your project management team. You're talking with your clinical team. There's some helpful resources that are available, that kind of give clinical data assumptions of how much, if you're in oncology, how much should you budget for a phase 1 study, and how much should you budget for a phase 2 study? And there are external resources that can help with that, and lots of consultant groups, CFGI, or is an example of an organization that's been probably really helping a lot of clients kind of figure out, how do we implement this, and how do we kind of get these costs and model out the revenue recognition.
So are controllers, CFOs just trying to brute force this? Are they hiring more people to handle this?
I think right now people are kind of in a wait and see mode, right? We've gone through the 1/1 true up for public companies, which is the 2017 audit. And now they've done the Q1 and the Q2 reviews are completed. And it'll be interesting to see kind of how things kind of fall out as you're doing your first year audit under the revenue recognition model. In my company, we have a really strong team, and we've been able to kind of manage the process. And I think when I was talking to another controller, he said with one collaboration agreement, it's pretty manageable, right? You can manage it in Excel, but some of these companies, have 2 or 3 collaboration agreements, and depending on how things fall out within the technical accounting analysis in steps 1 through 4 of the revenue recognition model, you could have multiple models for recognizing revenue within one agreement. So you could potentially have multiple proportional performance models under one collaboration. So if you have 3 agreements, you could potentially have 9 or 10 models that you're trying to track. And I don't know how a company that size would manage that without a tool. I think you would, to your point, you would need to hire another person.
So let's talk about that. What are you working on that would potentially help accounting teams not have to add headcount in order to manage this?
Yeah, so intheBlk software is an idea that I had of, the pain point of managing all of these Excel spreadsheets. And so my tool is really built to sort of be the home for every closed period of your model. And because each model builds off of each other, you can kind of have a more controlled environment where the actuals are locked. Once that period is closed, the actuals have been locked and nobody can accidentally change those numbers. All the calculations are done for you. So, you don't have to worry about hard-coded formulas or miskeyed data. And this basically gives more control around your model, because again, revenue recognition is always a material risk for an audit. And so the more controls you can have around your revenue recognition, the better. And so trying to identify areas where you can put in system controls, whether it's user access rights. So if you're my controller and I'm a staff accountant, Blake, I can enter all my data and I can click review, and then you get a notification saying, hey, Paul submitted the revenue recognition model. It's ready for you to review. And so you can go in and type up a few review comments and send it back to me. And then I can go in and say, oh, okay, yep, I should have put this number in. And then you have documentation of all that. And that's what auditors are really looking for, is, documentation of review. And then, I think the other thing is being able to predict how cost changes could potentially impact the current period and future period revenue. So this could be helpful if you have to give guidance to Wall Street, and you want to say, okay, if our expenses swung, $1 million over the next 3 years, what's the impact to the current period revenue and the future period revenue. So those are kind of the problems that I'm trying to solve, and then also being able to consolidate multiple collaborations in one place. So a CFO could potentially be able to look at a dashboard and see, okay, here's where all 3 of my collaborations are and the revenue that I'm anticipating to recognize.
It's fascinating. It's so great to see such a niche, tool being explored that you're building. Wouldn't have been possible 10 years ago, right? And it's only because we have easily accessible SaaS and cloud that we can do it.
Yeah, exactly. I mean, I think the cloud really opens up so many possibilities for these niche accounting tools. And, I was reading Ernst & Young put out a study that said that 80% of finance department tasks hold potential for automation. There's just so much possibility for well-executed tools that are user-friendly, that can really save accountants a lot of time. And I think that's kind of the vision that I want to set out with my tool. And, right now my tool's in a beta mode, and we're trying to get user feedback and kind of improve the tool. But the overall vision is really having a tool that, syncs right with QuickBooks or Xero or NetSuite, and you just bring in all your GL data, and then it spits out the journal entry, and you don't have to touch the revenue at all. I mean, in that, you think about the time savings from a tool like that. I think that it makes not only management more comfortable, but I think your auditors more comfortable. And I think that's really the value proposition that I believe that intheBlk software offers.
And being able to handle this increased complexity in the regulations without having to add headcount, hopefully.
Yeah, exactly. And I think you've mentioned on previous podcasts that, one of the challenges that the accounting industry faces is, a lack of talent. And I think one of the ways that companies and accounting firms can address this is by, utilizing systems very well. And I think it creates real opportunity for niche industry tools to really excel and really add a lot of value to companies.
Well, Paul, thanks so much for sharing your insights into biotech RevRec and what you're up to with intheBlk. If our listeners would like to get in touch with you about what you're up to, where's the best place for them to reach you online?
Yeah, so they can reach me at www.intheBlk.software, with black spelled BLK. And they can also find me on Twitter at the Biotech Accountant.
Paul, thanks so much for your time. And it was great chatting with you. Have a great week.
Thanks, you too.